talk about phase one of the pullback. Let's look at phase two. Again, just want to reiterate, very much generalizing here, but adding boundaries and structure, should I say, to your trading is really the key to kind of developing strategies that fit into specific categories. Otherwise, you're just loosely trading all over the place and you can't really adjust and quantify and improve. So phase one, very brief pullback, very shallow in terms of depth into the actual drive. Easy to kind of get on board, and you've got pretty clear parameters. Now, number two is a little bit harder. Now, this is a bit of a scruffy one. There's no doubt about it. Generally speaking, this is a bit of a dangerous one because this is pulling back way into the first pullback area, and I would be very cautious about this. I would probably want to have seen this hold around here or dip and kind of do some stuff up here really. But let's take it on what it is and we'll show exactly how we could structure this trade. Now, number two is you're looking for a longer pullback. As the time goes by and the trend gets more mature, pullbacks are going to be more pronounced, more longer, should I say, and maybe a little bit more depth. So you've got the first kind of primary pullback. The second is going to be a little bit broader, and then your third, as we said, is going to be a lot broader and kind of consolidating up here or consolidating near highs. So the theme is generally that it takes more time to do different phases, and we can see that here with this. If we put some kind of vertical lines to pinpoint the high there, that's phase one. Let's put another one here and say this is kind of phase two. This is a little bit deep, as I say, for a perfect scenario, but we've got the same kind of attributes. If we look back at the similarities, we start to get some support, which is what you need to see in an uptrend anyway for it to be confirmed that you want to buy the pullback. And here we've got a similar scenario. Support is tested several times over a long period. I mean, this is kind of an hour period as opposed to whatever that is, a 15-minute period. So we're stretching out the time, but the same kind of thing applies. And if you look, we talked about breaking the trend on this trend line, but if you then went broader with it, we're breaking the trend again on a longer, more in time wide trend line. So it's the same thing but just stretched. Imagine if you had the number one scenario here, but then you just stretched it for number two and number three. This is kind of exactly what you get. So you take it as you're looking to retest over the higher time period, so you're taking the double bottoms, that kind of thing, looking for some sort of bottoming pattern in the trend, or you're taking it as you break an uptrend line like that. Now this is a little bit of a caution. I don't think I would have taken this one, purely because you're looking at a reasonable pullback. Now, something to note is the 50% is often a good way of getting involved in the market, and it does often hold the market when you're talking broader, longer term pullbacks. Ideally, it's not that deep, but things aren't perfect. You have to take sometimes what you get, and it's still reasonably good uptrend. You're not like down in the 75% pullback zone, which would really be a no-no and don't want to get involved in it. You're kind of doing okay, and especially on a daily chart. In a daily chart, you want to see it a little bit higher. In a shorter time frame, 1 minute, 5 minute, you give it a little bit of leeway, a little bit of room. So that's exactly the same thing. You're looking at a broader pullback, a longer pullback. Maybe you want to use a higher period moving average. Something like a 100 on a 1 minute. That's going to be a little bit much for a daily chart because it's just too far, and obviously this is a little bit skewed because it's taking in data from the prior day, which doesn't really give it justice. But if we plotted it, if it was plotted from here, the 100 period is probably going to do something like this, push up, and you're kind of going to get that area where you want to maybe be involved in it. Let's flick this off. So again, same kind of way of doing it, looking for double bottoms, those kind of bottoming patterns, the change in trend, and also one final thing is just to look for these little flushes. And we have them on we didn't really talk about them with the first pullback, but this kind of thing is beautiful from a day trading perspective. Beautiful, not very exaggerated in this example, but often you get that downtrend move, a little flurry that pushes straight back up, and that's your sweet spot. If you can't get involved in it, you don't take the trade on it, understandably it's very quick. Often it happens, you don't want to dive in straight away. It's a beautiful, beautiful place to quantify your risk. You can take the trade long, you can put your stop under that flush level and say, you know what, if that was a genuine flush, if that was a genuine sort of stop hunt, I'm not interested. and in the trade if it goes lower than that. Same with this kind of thing. There's your little stop hunts, your stop hunts down here. If it goes lower than this, you know, you kind of don't want to be involved in it. A little flush, little flurry of volume, you know, that may well get you in. In fact, what you probably would have done, and this is probably if I was trading this would have done, I would have got involved here, having seen this support here. I would have got long and enjoyed a bit of a rally up. I would have looked for a push to highs. I perhaps would have scaled, but I guess I would have been stopped out on a move back under this flush low. I think that that is probably a little bit too much of a stretch for me to have continued. I may have re-entered once I've seen it pushing back up, but I think if I'm being honest, that would have been quite an interesting phase 2 to get involved in, especially seeing it hold at that support, taking it here, enjoying a little bit of a rally, expecting a bit more, not getting it and coming out. But ultimately, you know, that's what it's about. If you can quantify your risk, if you can minimize your risk, it doesn't matter. Phase 1 would have more have made up for that, because that's a very nice kind of trade, and you've seen it struggle a bit at the highs, and there's probably no reason for you to have got overly aggressive. It's met your primary target of breaking the high. So again, structuring it differently, but just understanding from a pullback perspective, number 1 is very, very shallow, very, very narrow, very, very aggressive and quick. Number 2, broader. And then number 3 is a lot wider. I'm not going to do a complete separate video on that, but this is the kind of thing on 3. Obviously, we had a full reversal on this for today, but 3 generally is more of an unwinding. It's the kind of thing that if you're trading intraday is going to happen around lunchtime, middle of the day. If you're trading on a daily chart, it's going to happen sort of 3 to 4 weeks in after you've seen the drive, the pullback. You know, it's that little bit of a test, not a lot going on, maybe volume's a little bit low, but it may just consolidate here before it kind of picks up again. And you're looking for a much longer shift. It's a big ship turning as opposed to kind of a speedboat, to use a bit of a weak analogy to be fair, but it's a lot broader, it takes a lot longer. And by the time you're on the 4th and 5th, you know, you really want to be very, very cautious, unless it's consolidated and it's almost reset itself. The longer the consolidation, the more you can almost say, okay, well, now we're part of a new trend. We've had the 3 phases and we're part of a new trend now. What you don't want is really aggressive moves and then getting involved. If you can get the kind of longer consolidation, then look and say, hey, you know what, I think the trend momentum has reset. Let me now look for perhaps phase 1 again on a drive and something like that.